All right, we're back again with another episode of PFREI. I'm your host, Fuquan Bilal. Oh man, today we have Jared Irby, president of Irby Home Buyers and in the Irby Group. Basically, as an experienced entrepreneur with a unique and diverse skill set. Now, Jared has opened and sold multiple successful ventures in his career. Two startups were taking over 10 million per year in revenue with a significant cash flows and profits. He is highly skilled in marketing, sales, and business management, and has a diverse experience. And his diverse experience has required Jared. Jared attended the University of South Alabama, and I see here you're also a pilot and some other stuff that we'll jump into. You're active real estate. You have your real estate license, and for about 10 years you've been in the business. So I really didn't dig too much into the bio, but we'll talk about it here, but I'm just impressed that you're a pilot also. Boating, fishing, hunting.
Yeah, man, just a good old country boy. That's it.
Oh man. So the first question, Jerry, I usually ask the guests is, why are you passionate for real estate investment? I wanted to have you on the show because, I look at what you guys are doing in Alabama and I'm like this, wow, aspire to, actually try to get on that level. So I wanted to have you on the show just to share. Why are you passionate for real estate investing?
Well, so let me start off. I appreciate the intro, man. That's awesome. It made me sound a lot cooler. But yeah, this is actually probably the easiest question I got or I've ever gotten. Right, total softball. I'm passionate about real estate because there's just so many ways to win. And, you look at other businesses and other things, there's, one exit strategy or two exit strategies, there's not that, you can definitely make money and win doing other things, but there's just so many outs and so many possible ways to win. I mean, you've got, inflation over time is appreciating the asset value. You've got leverage, you've got tax benefits, you've got cash flow, you've got inefficiency in markets and arbitrage opportunities where you can buy something for less than market value, which you couldn't do in the stock market. There's just so many ways to win. And that's why I like it as a business. And it's also fun, it's a passion. It's nice, like actually getting to see what you're investing in. You can actually go look at it. It's right there. It makes sense. It's not just a number on a screen, like if you were buying a stock. And so that's kind of the things I love about it.
Awesome. Use one of my favorite words, arbitrage. I love that. That.
Yeah. And it's essentially what we do, right? Like you can't go buy a share of Coke for less than market value, right? Like it's very well established, super efficient market value. But I can go buy a house less than you can, or, you could go buy a house less than I could because we have an off market, insight into it, or we see the possibility of being able to polish it up and redevelop it and make it into something better. And that's just not something you can do in a lot of other, investments.
Awesome. Complete control. So let me ask you this, Jared. You've been in the business for about 10 years now, right? This is, I would guess COVID was like your first, hiccup in the market. Not saying your business had a hiccup, but the first time in a while that you've seen this, because I went through, the last downturn, and I always look at people who started after that, right, and see like what are their biggest fears. Like they haven't experienced something that traumatic.
So I'll tell you this. I've actually been investing in real estate longer than 10 years.
Okay.
And, I had a lot of flip projects and stuff like that going in 2006, 2007, 2008.
Okay.
Now granted, definitely not at the scale we are now. It was a much smaller operation at that point, and it was part-time, and, I'm full-time now. But I would say that was kind of a unique, downturn. I've done a lot of research on, downturns and things like that. And that was a pretty unique set of circumstances that hasn't occurred very many times throughout history. Not saying it totally couldn't. But yeah, COVID was kind of one of these wake up calls where, hey, everything's kind of in euphoria, and then boom, you get hit between the eyes with the possibility that things go down really quick. Tenants maybe not pay, that kind of thing. So for my business, I feel like it made us stronger because we kind of freaked out a little bit and, went into hardcore cost cutting mode. some projects that we had that were kind of just sitting vacant. We slashed prices, moved it, stuff like that. I feel like we were pretty far ahead of the curve before anybody else was freaking out too much. We were already cutting and burning, just to make sure we minimized our risk. We definitely got cash heavier. We had some couple deals that we were, going to be investing a lot of cash in that we figured out, how to not put as much cash out, bring on partners and stuff like that and de-risk it, negotiate, we renegotiated some deals, that kind of thing. So yeah, that was kind of what we went through. And it's a business, right? You've got to play offense and defense. And so I think that, right now, things are kind of euphoric and it's nice. It's good to get all the wins, but at the same time, you always got to be kind of playing defense and protecting your downside because you never know, when something's going to happen.
Yeah, I definitely say it made all of us smarter businessmen, right? We figured out a way on how to get ahead, and we kept our pulse on the market and figured out different ways and collaborated with each other to see what was going on in this market, that market, how people, went in over here and what risks they had and everything else, and everybody just adjusted. Like you said, now everything's in a euphoria where everybody's like, oh, it's the seller's market. We're getting 30% more than list price, and then how long can that last? What's on the back end of that? Like, how are you positioning your company for if something catastrophic happens? We have inflation, stagflation, deflate, whatever, all this stuff is happening.
Yeah.
How are you prepping? How are you positioning yourself, and how are you posturing for what may be looming down a few years?
Yeah, so there's a couple things. Like I'm paranoid. I think good entrepreneurs. Seriously, I really think good entrepreneurs.
That helps.
Right? Like to the point where I get most stressed when everything is going good because something bad is coming, right? And it's not that you're, I'm a big like law of attraction kind of person, so I'm not trying to attract some negativity like that. But you have to know when you're when everything's been going up, there's going to be some downside. So what we've been doing in our business is continuously making sure that we're running lean, cutting costs as much as possible. Even though we have a pretty big nut still, we do have the ability to scale it up and down very rapidly. We've been putting less cash into deals and bringing, while there is that kind of euphoria, we've been bringing partners into everything, just to make sure that, hey, we have more cash to sustain any kind of downturn. Something else that helps us too, that's somewhat unique, is the markets we're in really haven't run up like you're talking about. Like we're not getting, we're getting some over ask or at least at asking price offers day one, but it really hasn't gotten frothy and out of control where we're at. It's just really a strong seller's market, but it's not like, Austin, Texas or, other markets where I've just heard that things are going crazy.
It's bananas. We got a flight from New York coming over to New Jersey where I'm at. Oh my God, our prices are a joke to them. Like they're used to paying, $2 million for like a 3-bedroom, and they can get a 4-bedroom house for like, $800,000.
That's crazy. Well, and I bought a house 17 acres in the best school district in town on a beautiful river with 1,500 foot frontage on the river, with a pond and a beautiful fully renovated house for, less than $1 million.
Yeah.
And so that's the kind of market we're in, right? Like that where you're at would be several $1 million for sure, if you could even find it. And so we haven't experienced the markets that we're playing in. We haven't experienced those kind of run-ups, which is nice because honestly, we're traders, we're in and out as quickly as possible, protect the downside as much as possible. Anytime we invest on more than like a 3 or 4 month time horizon, we have cash flow. That's just a rule. I don't invest in really anything very often that doesn't have a lot of downside protection built in or cash flow. So we're totally buying long-term assets still, and we'll continue doing that, but they've all got a cash flow. We're not speculating on land and some of the more dangerous kind of things. We're buying cash flow, or we're buying properties that we're in and out before the market could adjust, and I've done a lot of research, and the most our market's ever been down in a year is like 10% ever. And really it wasn't even that much. It was more like 7 or 8% in the markets that we're in. And so, we have huge margins on our flips. So I know that we can be in and out before we ever really see more than a, 5 to 10% decrease. And even at that, I still make money. So, we have enough margin on all of our deals to sustain a 20%, and still get out alive. Which I don't know that would be possible in some other markets,
Yeah. It's kind of tight now for all the wholesalers here. They're trying to figure out, how to pivot in this market because people are willing to pay more. And then you have all the newbies that are coming and seeing the HGTV shows, which is, making these ridiculous offers, and they're going to get stuck with that. Let's talk about operations now. You mentioned a few things. You mentioned fix and flip, some cash flow. What does operations look like? You guys doing some multifamily stuff, some wholesaling? Let's talk a little bit about the business model.
Yeah, I mean, our main operation is wholesaling and with some flipping. That's just kind of a product of the times right now. I mean, I think it's better to wholesale right now when things are kind of like moving quick and high. It's easier, obviously, to sell a deal and be done with it, not have to worry about renovating it and selling it. It's quicker. We lose a little bit on margin, but we make up a lot on safety of being in and out. And so then we're kind of focusing on, picking off, good cash flowing single families, and then also multifamily deals and even a commercial deal here and there. So yeah, we're acquiring, multifamily deals. We're building up our property management company. Since we are wholesaling to so many investors, it's a great opportunity to offer them other additional services that have, long-term cash flow potential. So, we're building up a property management company. So we're really just focused on, de-risking the business as much as possible, but also building up long-term assets. So really that's kind of made us pivot toward wholesaling and buying in our own portfolio more than even flipping so much.
Interesting. You're talking about putting together your property management company. Is that a vertical integration play there to kind of cut costs, or?
Well, it started off because all the property managers in town sucked. and I had a lot of properties and I wanted to be able to scale. And, once you get at least 100 plus rentals, which, we were well over, it makes sense to have your own in-house just because now you have complete control over it. I'm already in the business full time. If I had another job or another business, I probably wouldn't do it. But, I already have the office, I already have the staff, I already have the accounting team. It was kind of one of these things where, hey, let's add it. It wasn't designed to be a profit center at first. It was, from the actual management fees, it was designed to manage our properties better than a property manager would, who isn't incentivized on the equity side. They want to collect as many fees from you as possible. If it sits, it's no big deal. What were they going to make 50, 75 bucks on it that month? It doesn't really matter. But I lost $1,000 a month in rent that month, so I have a huge incentive that they don't have. So that's kind of how it started. And then we decided, hey, we can get even better staff. We can pay more for them. We can hire more people, de-risk our business even more by taking on third-party management now that we have the systems and processes.
Yeah, that's very important, man. A lot of people are going with that vertical integration play because of the control factor, the cost factor, and then just the importance of being able to keep your finger on the pulse to see what's happening. It's people lose so much money. That's the story I hear, and it's so sad because there are a lot of great property management companies out there. Not to say anything bad against them, but it's hard to find them in your marketplace. Like I struggle with that as well. We have internal in-house property management as well for those reasons.
Yeah, and look, it's not the sexy business that I like. I'm a sales guy, and I like to have big deals that have big margins. And, frankly, property management, it's not really, it doesn't lose money, but it doesn't make it doesn't make sexy amounts of money, right? Like it's just a consistent,
But you save a great deal of money for having
exactly. My
that.
asset is protected, right? Where,
Exactly.
I've got leverage on it. I feel like the banks that we deal with appreciate that we, have our properties much better run than, would be run with an outside, property management. I mean, we're running, 3% vacancy rates. Whereas I've never seen a property manager here get less than like, 7 to 8%, and even then they'll spend extra money on maintenance because it's not theirs, right?
Yeah.
If you were managing somebody else's property, it would be tough to, you would just spend the money, or, it wouldn't be as like a pressing matter as it is to me when I have a weekly meeting with my property management team. That's my asset. That's my, that's my ass on the line. Right. And so I'm a lot more protective of it than I feel like somebody else would be.
Awesome. Now, how do people participate in one of your deals? Are you doing like trust deeds, putting them on like first position? Um, you
Yeah.
know,
Yeah. So when we do flips, we mostly use private money, and we'll do, mortgages or trust deeds if you're from up north, I guess. But yeah, so that's how we kind of securitize that. Occasionally we'll do some, private money where we keep it rolling, and just, it would be unsecured, but, it's basically based on the assets of the company. And then, every now and then we do a syndication. Like back in August, we bought, 93 single family houses in one transaction. And we did a syndication where we raised, we went out and acquired the bank debt, and then put our own capital into it, but also raised equity from investors on like a small syndication. So that's really kind of how we're, focusing on raising our capital right now.
awesome.
Really, really simple. We're not doing any big marketing campaigns. It's kind of all been people that like are in our circle.
Yeah, people who know, like, and trust you, who've done
Yeah.
business with you before.
Yeah, and that's important, for anybody that is raising money is, when I first got into the business, it really just business in general, capital is always an issue. And so you find that first investor and you're like, oh, thank God I finally got the money, right? Well, when you don't need the money now, and don't get me wrong, we need capital to run our business, but we have enough sources that we, can find it easier. It's better to not make a deal with the devil, so to speak, right? And really vetting your investors is important, to make sure that their goals are aligned with yours, because you can get in bed with the wrong person, and I definitely have before, whose goals aren't exactly the same as mine. Their time horizon's not the same on the investment. They have higher expectations of it than I do, or different expectations. And it usually doesn't work out very pretty, and kind of ends in some animosity. So, definitely vetting your investors and your capital sources is very important. Same thing with banks too, right? I don't want to work with a bank that has a reputation for calling loans due right when times get tough. I want to work with a bank that has a reputation for working with investors if something happens.
Yeah,
Um,
yeah.
so where you get your capital is very important in this business, in my opinion.
Yeah, that's a really good point. I try to now today focus on lines of credit that don't have, those call options and stuff like that, where I can put a line of credit on a piece of asset I have, or cross collateralize something where I can use the cheap money that's out now, right? So right now it's debt is good and cash is bad.
Yeah. Yeah. It's so weird. It's the exact opposite of everything I was ever taught. But it's true, right? Like if you've got the government printing massive amounts of money, it's inflating the price of assets, right? Inflation may not be everywhere yet. In fact, some people say that there might even be some deflation in some ways, but the cheap credit, the lower rates have definitely inflated asset prices for real estate. If you're a payment buyer and you could afford $1,500 a month, well, you went from just for sake of argument, a $200,000 house to a $250,000 house that you can afford on the same exact payment. You would think payments would go down, but payments really just stay the same. The price goes up, right?
Yeah.
And so I feel like that's what's kind of happened lately. And so this cheaper credit, this, government stimuluses and stuff like that, really kind of inflates those asset prices.
Awesome, awesome. So you have two beautiful daughters, and you also a pilot. Let's talk about the flying thing now. What are you flying? What's the
I've got a Cessna 182 RG, so a 4-seat, 150 knot airplane, and yeah, I have two daughters, and then I have two stepkids as well, a daughter and a son. So we've got four total between us. So it's quite a crew. But the piloting and stuff is a lot of fun. It's just been kind of a passion, and have been able to actually close some business deals because of it. Pilots tend to have some money, so it's a good crowd to be associated with, but also it's kind of cool going and looking at deals a little bit further out than you can just drive to easily. You can just hop up, check a property out, come back. It's kind of a fun thing.
Go to the hangar, hop in the plane, boom, go out.
Yeah, and I honestly feel like it made me better at business too, because you have to be real calculated. You have to know what the risks are, be willing to accept the risk, but do as much as you can to mitigate those risks. Follow checklists, processes, procedures, stuff like that. And I'll say, before I was a pilot, I don't think I was that way. I think I was more of a cowboy with my 6-shooter riding around on a horse, just finding trouble. So, and now I feel like things are a little bit more calculated, and I do attribute, some of the flying stuff that I learned to that.
Yeah, I gotta go for my pilot license, and I need that in my life.
Yeah, it's fun, man. It's a good stress, right? You get out. So we fly down to the Bahamas a lot, me and my wife, and island hop around. Go to some islands that are hard to get to with commercial flights and stuff. Where the much cooler ones, to be honest, right? Where there's not as many tourists. And you're out over the water in a single engine plane, 50 miles from land in every direction, and you have a life raft and like a satellite beacon if you go down. And it's a good stress, right? It makes you pay attention. It makes you check all the boxes. It's definitely a risk, but at the same time, you've taken all the steps you can to mitigate it. So it's this good stress. It makes me clear my brain, turns my ADHD off, and lets you focus really hard. It's kind of one of the few things I can do that lets me take my mind off of business.
That's awesome, man. Thanks for coming on the show and sharing with us, man. I'll be down in a couple of months to come check you out, and looking forward to that. It's another great episode, PFREI, a passion for real estate investment. I'm your host, Fuquan Bilal. Jared Irby from Irby Home Buyers. Go check them out. Make sure you guys go check out the website. What's the website, Jared? Plug the website.
Yeah, irbyhomebuyers.com, and you can hit me up on Facebook, LinkedIn, maybe Instagram. I think I have one of those. So, a couple different places on social. And yeah, appreciate you having me on, man.
Awesome, man. Thanks a lot. I really appreciate your time.
Yeah, take care.